Hey, Tops, how's it going? This is Evan Sayner.
And I'm Matt Jordan. We're both with Northwestern Mutual, and today we're here to talk a little bit about life insurance. So, a couple questions, Evan. The first one is, what is life insurance?
Yeah, good question. So, most people buy life insurance as a tool to protect their loved ones, and that is the most well known benefit of having life insurance. While you're alive, you're working and you're helping to support your family. But in the worst case scenario happens and you pass away, they no longer have your support. Life insurance can be a useful tool that can help cover your family's final expenses, maintain their lifestyles, and even if you're not there, it can give them peace of mind knowing that you have that protection in place. It's also a powerful tool that can replace the uncertainty with guarantees that money will be there to help your family. While the death benefit of the life insurance policy is incredibly important, it can also be a tool to help you gain financial security while you're alive. So, what are some of the benefits of owning life insurance?
Yeah, awesome.
And what does that mean, owning life insurance?
Yeah, so it's a great way to leave a legacy, like you were talking about, whether the beneficiaries are your family, a charity, or both. So, life insurance funds are liquid, meaning your beneficiaries can get those funds quickly. That's important, especially if they need that money to pay off any debts or settle the estate. But the primary reason for life insurance is to provide that death benefit. So, perhaps the most important of all, and as part of a sound financial plan, life insurance proceeds can help provide retirement security for a partner so they don't have to rely on the family or the government care as they get older. So, another benefit having life insurance is that some types have cash value, and any potential dividends the company's paying, those grow tax deferred, and it could also be a source of money you can access at any age for any reason. Um, Another ways you can use cash value is to cover the cost of any unexpected emergency, children's education, supplement your retirement, make a down payment on a home, fund a new or even existing business. But when the cash value is used, it does affect the policy by reducing the death benefit. So that is something that needs to be taken into consideration. With those types of policies, the dividends are not guaranteed, as they are subject to the claims paying ability of the issuer and the insurance company, and approved by each company's board of directors. So with that, there really is a couple of ways you can access the cash value. You can take a loan against the cash value, put it up as collateral for a bank loan. You can take the cash value outright, or you can cash it in and terminate the policy. So really kind of gives you certain options, but with life insurance, not every policy has those certain advantages. But really, when we're talking about life insurance and costs, really, Evan, my question: what goes into, what affects the premiums and the costs of different policies?
Right. So, a lot of what we're telling our clients is, it's based on our age and health, and that's the God's honest truth. So, you're never going to be more healthy than you are today, because we don't know what tomorrow is going to bring. So, our age is number one, then our gender, whether we're male or female, our health history, and then any kind of medical history behind that. So, they really, depending on the company we go through, looks at 5 to 10 years. So those are all important things that go into the premiums and the cost. So with that, I know we just touched on it a little bit, but can you walk us through a little bit of the difference between the types of life insurance and how they work? I know we just kind of got into how you can use whole life.
Yeah. So there's many different types of life insurance policies, but really kind of breaks it down into two basic types. So term and whole. While they both serve the same purpose, there are some key differences. Term life insurance is temporary, meaning it provides coverage for only a specified period of time. So that could be 10 years, 20 years, or however long you decide you need it for. But if you pass away in that time period, as long as you've been paying your premiums, your beneficiaries will receive that payout from that policy. Once that term ends or you stop making payments on it, the coverage ends with it as well. So think about it like renting an apartment. When you rent, you have a home for the length of your lease, as long as you keep paying your rent. But when that lease is up, you either renew or you're done with it and you got to move out. So because it's designed to be in a place for a specific amount of time, most people buy term insurance to cover any financial obligations that will dissipate over time, such as a mortgage, school loans, business debt. The cost of raising your kids through college is a big one. So Term insurance is often the most affordable type of life insurance. It gives you the most coverage for the lowest initial premium. And can also be a great option for people who are just starting off or who only need it for a certain amount of time. So if term insurance is like renting an apartment, whole life insurance is more like owning a home. So whole life covers you for as long as you live, why it's called permanent insurance as well. Also, why it typically costs more than term insurance. So because you own the life insurance for your entire life, and as long as you keep paying the premium, you build cash value in that policy, kind of like I touched on earlier, and it builds, it builds equity like your home does. So over time, that cash value can become quite significant. So really the kind of next question I have, Evan, as far as life insurance, or what are some other considerations we need to take into consideration?
Yeah. So as we just kind of went over, both of these tools don't necessarily take into consideration the role that life insurance can play into your overall financial plan. So really when we're looking at is what do you have already? What are your goals? How can life insurance help you minimize your risk and close those gaps? Can't really get a good handle on that without talking all that through with your financial advisor. Our job is truly to be here, help you see the big picture, and us set out a plan to help you get there. So as you can probably imagine, it can get pretty into the weeds and very complicated quickly. So that's why we encourage everybody when they're going through this decision to keep really three things in mind. First, we want to look for quality. We always strongly recommend that we work with a company that has top ratings from the 4 major rating agencies: Moody's, Standard & Poor's, Fitch, and A&M Best for the insurance financial strength and claims paying ability. Second, we always recommend work with a company that will be there when you need them. At Northwestern Mutual, we've been helping clients take control over their financial future for over 160 years. They're a company that's built to last. And finally, perhaps most importantly, working with a financial advisor you like and trust, who has the expertise to guide you toward a solid financial future, who listens to what you want, and from there we develop a game plan that we can, and who also has access to the expertise of others if we were ever to need it. So having a firm that's over 160 years old at our back, gives us the confidence to go out there and meet with anybody out there and help them fulfill their goals and their plans. So if you have any questions around life insurance or anything, Matt and I are here to help and be a resource. So just give us a call. We'd be happy to talk.
Go Toss.